Gold and silver are testing some massive levels just 24 hours ahead of FOMC, and the US dollar is doing the same. So we're going to talk about all three markets in this video: gold, silver, and the DXY, because I'm promising you that some of the levels I'm going to show you today, especially on gold and silver, are ones that you have not seen yet, and they could change the way you're looking at these markets this week. So my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So let's take a look at gold here first, XAUUSD. And this is the 4-hour time frame. So what I've mentioned recently here is obviously we can see that gold tested this low back here. We actually swept the low and recovered back above. So back here when gold was testing this area, what we talked about was that looking for shorts obviously didn't make a lot of sense because you don't want to short low. You want to look for some relief here into imbalances for gold, which we had two that we were looking at. So in previous videos, what I said is that this candle right here, this 4-hour candle, this was an inefficiency back here. So this one here, and then also an inefficiency up here above these highs. So far, we've obviously seen gold mitigate or retest this first one here. However, we do still have an imbalance up here around 4,400, maybe just above that, okay? So this one here is still open for business. Now, whether or not we see gold tap into that area is yet to be seen. Obviously, we have FOMC coming up within 24 hours here from the time I'm making this video, so keep that in mind. We are likely to see a lot of volatility for these markets. Now, this one here is being tested. However, the key here for gold is that so far there's really no indication of a top. So for this, what you would have to see is just thinking in terms of smart money concepts, right? And break of structure, change of character. What you would have to see is on this move up, you'd have to see a very clear and obvious swing highs like this. And then you'd have to get a BOS above the high, right? Close above, and then close below that low. Okay, this protected low in order to give a change of character. And so far, what you can see here is that even on these more minor swings, okay, we haven't taken anything out. We have this high back here. We have this low right here. And so far, all of this is just internal. Okay, even if you were to use this low right back here, right? So if you were to call this a BOS here, and then you were to use this low down here as your protected low, you can see gold still hasn't taken that out, okay? So right now, there is no signal here, in my opinion, that this is a short. Now, why am I looking for shorts on gold, right? I know that's an unpopular opinion because people are seeing this bounce here so far this week and thinking, okay, we tested the low down here, we swept it. That was a false break, as a lot of people are calling it. And they're saying this is a V-shaped bottom, okay? Very aggressive bounce, therefore the low is in. That's what people are saying. Now, I disagree with that for a couple of reasons. One, because I am still bullish on the US dollar, okay? I'm still bullish on the US dollar because if we look at the DXY chart, you can see that back here we had a BOS below the lows. We've talked about this many times, but this is a daily time frame. You can see we got the close below the lows back here, making this our external highs. We closed above it over here, okay? And even though this was pretty close, like I've said in recent videos, we've talked about this many times, the Euro USD closed below its respective low by over 50 pips, okay? And the Euro is the most heavily weighted currency within the DXY index. So this right here, in my opinion, is a bullish change of character. Now, it doesn't mean that we can't see pullbacks, clearly, because we did get a pullback back here from the DXY, but overall, I am still bullish on the US dollar. But really short term though, guys, why I am very hesitant about gold and silver for that matter is going to be a level that I'm sure many of you have not seen yet, okay? And it is pretty obvious, okay, when you know what to look for. But if you go back here on the daily chart, so if we move back here toward this low, this might seem pretty insignificant at first. You can see we do have a high back here, okay? And then also this low. Now these line up pretty closely to one another, but what I want to show you here is a level right here off of the opening price, okay, of this candle right here. So this was January 2nd. Now, this right here is going to be gold's 2026 open, okay? So this is the yearly open for gold. And that level comes in right there at 43.26, okay, and change. So this level right here, let's go over here and take a look at what gold has done surrounding this level over the course of the year, right, over 2026. So what you'll notice is that back here, you can see we did actually wick below it. So this is the daily time frame. You can see this candle right here, massive candle, massive range. We had a large wick below here, but we never closed below. Now, look at what happened last week, okay? And this is, again, what a lot of people are not paying attention to right now is the fact that last week, this was the first time gold had closed a daily chart below its 2026 open all year. And that, in my opinion, is significant. Now, not only that, but if you look at a weekly time frame, okay, look at this right here. right, it also closed the week below. So not only was this a daily close below the 2026 open, but gold also closed the week below. Again, this was the first time we have seen this from gold. Okay. So in my opinion, that is significant. Now it's no coincidence that look where gold is struggling so far this week. Okay. You can see that we have these long upper wicks forming here, and gold is really struggling at this level following last week's close below the 2026 open. Now you combine this right here, okay, with the DXY on the 4-hour time frame, holding above levels like this that we've also talked about. Okay. So over the weekend in the SMC outlook, what I mentioned there was that there was a single print down here off of this displacement, okay, at 99.47. Now, single prints are thinly traded areas. They are inefficiencies in the market, and they're likely to be tested by markets. However, they are also likely to trigger reversals in a lot of cases. And you can see where that was tested down here at the low from the US dollar. And so far, we have seen the market try to put in a bottom, although we're really not seeing a lot of follow through here from the DXY. And a lot of this has to do with the fact that tomorrow is FOMC. Market participants are hesitant to put on large positions, just 24 hours ahead of FOMC. And that's to be expected, right? That's reasonable. But right now, the DXY is holding above this area, okay? So you can see this channel going back here to May 6th. And so far, we have the US dollar holding above this, okay? Now, obviously, there's no guarantee that this continues. The DXY could break down from here, in which case we could see some more relief from gold and silver. But the point here is that when you look at the DXY holding onto support here, and you look at gold holding below its yearly open, following last week's close below, right, it does kind of take on a new shape, here on the charts, right? And hopefully this is kind of changing the way you're looking at these markets. Now, I don't want to completely influence you and say that gold is a short, right? That's not what this is about. This is never financial advice. But the fact is that for gold to be a long, okay, to be bullish on this market, just from a pure price action perspective, you would have to see gold getting back above here on the high time frames. Okay. If we can close, days and the week above here following FOMC, then yeah, I think we could head up here toward these highs for sure. But this level here at 43.26, following last week's close below, also those daily closes below, this is right now resistance. Okay. So, first of all, there's no structure on gold to make me think that a bottom is in. And I've talked about this before, right? When you think about SMC and you think about structure, this up here is the protected high because this entire move down was one price leg. So in my opinion, even though this bounce has been relatively aggressive, there is nothing here to make me think that a bottom is in, okay? Because if this is your price leg, we have the BOS back here on the close below this low. This is your protected high. This right now, this entire move up is just relief within a downtrend, okay? And this leg of the downtrend we saw start back here in April. So lower highs and lower lows for now. And also, again, we are seeing gold struggle there at that 2026 open. Okay, so in my opinion, again, this might be largely unpopular because people are seeing this bounce here from the lows. They're seeing this aggressive bounce and saying it's a V-shaped recovery or a V-shaped bottom, and therefore the low is in. Look, it could be, guys, but the bottom line here is just from a purely price action standpoint, you would have to see gold getting back above here at a minimum on the daily chart, okay? Getting back above 43.26. Really, though, because last week closed below, you'd have to see it get back above here on a weekly closing basis, okay? So until that time, gold is struggling here. I don't see any reason to be bullish on this market. If that were to change, of course, I would change with the market. But right now, guys, I really don't see a lot to be bullish on. And at the same time, like I said before too, all of this here is internal, okay? So as far as getting bearish on this market, at a minimum, okay, at a bare minimum, right? No pun intended. At a bare minimum, this low back here would have to be taken out, okay? And that's simply because, again, you could technically call this on lower time frames. You could call this a BOS back here, and this is your protected low. So right around 4,300. I think if we see gold get below here, following FOMC, then that could be the signal that a local top at least is in, and that could push gold back here toward the open gap from the weekend, as well as the inefficiency back here as well. Okay, so spent a lot of time here, guys, but there is a lot to talk about going into FOMC. But really, I did want to show you the fact that gold is really struggling here at that 2026 open. Of course, this could change, right? Gold could close back above here. But for now, guys, I think that this area around 43.26 is going to be the one to watch this week. Okay, let's move on here to silver here, XAGUSD. And very similar to gold, you can see that this right here is essentially the yearly open for silver, okay? So if we go back here, you can see that if we find January 2nd, okay, so January 2nd was right here. Okay, so in this general area, 71.66, I believe here was the 2026 open. All right, so it's actually 71.83. So this area through here, 71.83, basically between 71 and 72, that's going to be the area to watch. Now, on silver, it's a little bit different though, because if you notice over here, you can see where silver has kind of been bouncing back and forth between here on the daily chart. However, I do want to show you something that is really eye-opening on the 5-day time frame. Okay, so if you take a chart and turn it into, 5 equal days, right? So every single candle here is 5 days in the market, which also kind of makes sense because we do have 5 trading days within a week, right? So the 5-day time frame is also one to potentially look at and potentially add to your arsenal. But if you look at the 5-day time frame, what you'll notice here for silver is that, again, this is the 2026 open. Notice support back here, support once again, support through here. Now look what's being tested as resistance following last week's close below. This was the first time we saw silver closing below its 2026 open on those higher timeframes. Okay, so this right here, in my opinion, is significant, and it's a mistake to ignore because look at this high here on this 5-day chart. It is right off of this level. Okay, so in terms of what could set up the short setup here for silver, because like I mentioned too in a recent video, if we go out here to the 12-month time frame, so every single candle here is 1 year. This is a level that goes back 46 years to 1980. Okay, so this was the 1980 high. We had this high through here. We had the breakout, a lot of displacement through this area. And so in my opinion, 48 is going to be potentially one to keep an eye on over the coming months if we do see gold and silver move lower. And one reason for this too is that if you look at this back here, so if you go to a monthly time frame, notice all of the displacement here on this breakout. A lot of inefficiencies still back here in this region. So 48, guys, if we do see gold and silver move lower over the coming months, this is going to be one to watch. Okay, now before we move on to, guys, if you want to see exactly how I trade SMC full time, then check out the link right here on the screen. That's going to be a free SMC training that is 2 hours long. It's going to show you exactly how I trade SMC. I hold nothing back. You will not find this content on YouTube, and it is 100% free, so you might as well check it out. If you don't see it here, check out the link in the description, which in the description too, you're gonna find a link for my recommended brokers. Okay, so check that out as well. If you're looking for a place to trade, a trusted place to trade, then check that out too. Okay, so heading back here to the silver chart. Now, looking at the daily chart, you can see where, again, the market is testing that yearly open after closing last week below it here in this area. So again, between 71 and 72, this general area here at these lows, this is gonna be one to watch here for silver. Now, like gold though, nothing says that we can't reclaim this level. Like nothing says that just because the 5-day closed below it doesn't mean that silver can't just reclaim this and just head back here toward inefficiencies like this. It absolutely can, okay? And even as I'm making this video too, you can see where the DXY is starting to break down here a little bit. Now, whether or not this holds, we'll have to wait and see because, for example, this 4-hour candle still has 3 hours left in it. So we'll see if we do get a slight breakdown here from the DXY heading into FOMC. That could, okay, it doesn't mean it has to, but it could actually trigger some relief for gold and silver. Okay, and it's why I'm showing the DXY along with these gold and silver charts. But right now, this is going to be resistance for silver. So again, just like gold, I don't see any reason to be bullish here. First of all, you have the market tapping into this yearly open following last week's close below. Furthermore, too, you look at this on a 4-hour time frame, there's really no structure shift here to speak of, okay? I mean, look, this price action back here, you could technically sit here and call this, well, this is the BOS, and then we have the high up here and we close below, therefore this is a change of character. But look, this move right here, this retracement, okay, this retracement within the context of this price leg, this is way too shallow. If the market had done this, okay, and then we got the close above, then that would be different. But instead, this was just very, very shallow. Furthermore, too, we had this inefficiency back here, which is really all that's happening so far this week. The market is just moving back here to mitigate that inefficiency and retest that yearly open that it closed below last week. Okay, so really from a structure standpoint, if silver can get back above these highs up here, really when you look at this move, I mean, really it started from these highs back here. If silver can get above these highs back here and also reclaim the yearly open on the higher time frames like the daily and the weekly, then we could see silver turn bullish back here toward inefficiencies like this back here. Now, what would also have to happen though is, most likely the US dollar would have to break down, okay? The US dollar would have to break down, and one scenario here too, before we wrap up with this video, one scenario for the DXY that I've mentioned before is that if we were to see the US dollar break down and gold and silver see some relief, then this low right here, below this low, we do have an inefficiency back here as well. Okay, so within this pocket back here, there is an inefficiency for the DXY. So this is going to be one to watch here over the coming days. Longer term, I am still bullish on the US dollar. It doesn't mean that we can't see a pullback before then. Okay, so just keep that in mind that a pullback from the US dollar could signal some relief from gold and silver. And that's exactly why, guys, I am not saying that gold and silver are a short right now. Because again, you look at even the gold chart, okay, on the 15-minute, there is no signal because this low back here was never taken out. So this market is technically, this relief rally is still intact. I want to be very clear about that. There is nothing here to signal that this is a short. At the same time though, right, you look at this on the weekly and the daily charts, and you can see where gold and silver are once again holding below these levels after closing last week below them, okay? So just keep an eye on this as we head into FOMC. I really think that the next 24 to 48 hours following FOMC, we are likely to have some answers for gold, silver, and also the DXY charts. So I truly hope this video has helped. Keep it locked in here by subscribing to the channel, and also check out the link for that free SMC training that shows you exactly how I trade live. Until next time, trade well, be careful with tomorrow's FOMC, and I will talk to you then.